We're going to be talking about the strong jobs report. Unemployment dropped to 4%. Unemployment dropped to 5.4%. I'm sorry, ladies and gentlemen. But we're going to talk about how this strong jobs report, how it relates and what does it mean for interest rates and particular stocks. The number one way to find out when a company is expanding is it must hire people. Once a company starts to build up its return to earnings, it will start to hire people, right? So we're going to look at this job report, and also what I mean by that is when you read a jobs report, it's going to tell you exactly what sections are hiring the most. That could be potential growth in the near future. And the other thing is, what does this mean for interest rates? You know, ladies and gentlemen, in the investing world, you got to follow interest rates big time, all the time. All right. So right here, what I have put up in front of me is the jobs report that was released today. So we're going to go through that. But ladies and gentlemen, y'all already know what time it is. If you haven't done so already, go ahead and make sure. Hit the subscribe button, hit the bell icon, hit that like, comment, and share button. Once again, ladies and gentlemen, boys and girls, and children of all ages, you are now tuned into the Investor Show. As always, this is your gracious host, the Prince of Investing, Prince Dykes, coming to you guys and girls live all the way from the beautiful city and state of Denver, Colorado. Don't forget to hit that like, subscribe, comment, and share button. And as always, I don't have a lot of time, and I definitely know you guys and girls don't have a lot of time, so we are going to jump straight into it. Ladies and gentlemen, as you can already see and as you can already know, we are looking at now we're looking at the jobs report that came out today, what I have put up in my screen. So right here, this is coming from the Bureau of Labor Statistics. This is BLS.gov, United States Bureau of Labor Statistics. This is the economical news release, the economical situation summary. This was released today at 8:30 a.m. Now, the reason why I like to look at the jobs report is, you know, we're going to get into how it turns into interest rates, but let me go ahead and drop this in here, what I meant to say here. Where are we at? There we are. Where are we at? Okay. So the first thing is, let's get to it. There we go. All right. So this was released today. The non-farm payroll employment rose by 943,000 in July, and the unemployment rate declined by 0.5% to 5.4%. The U.S. Bureau of Labor Statistics reported today notable job gains occurred in leisure and hospitality, in local government, education, and in professional and business services. This news release presented statistics from 2-month survey. The household survey measures labor force statistics, including unemployment by demographic characteristics. The establishment survey measures non-farm employment, hours earning by industry. For more surveys, you can follow the next 2 months. But anyway, ladies and gentlemen, they're saying unemployment has dropped by 0.5% to 5.4%. Of course, this is a good thing, meaning more people are working, more people are going to have money, things like that, right? So here, unemployment to drop by 0.5%. Now, unemployment now is 5.4%. Let's see what else they got here. Among the working groups, the unemployment rate declined in July. Here's the statistics. Unemployment decline in rates in July for adult men, 5.4%, adult women, 5.0%. So women are working more than men. Whites, 4.8%, black, 8.2%, almost double, and Hispanic, 6.6%. The jobless rate for teenagers is 9.6%, and Asians, 5.3%, show little changes over the month. So that's fine. You know, they kind of break down the demographics of who's employed. They get into labor force participation, how many people are still participating, meaning actively looking for a job, versus people who have fell out of the labor force. Maybe they want to be stay-at-home moms or something like that, or dads, whatever the case may be. So anyway, right here, this is kind of, you know, the reason why I paid attention to this jobs report, because I want to pay attention to unemployment. When I pay attention to unemployment, ladies and gentlemen, unemployment drops to 5.4%. This is big because it rolls right into, I wish I had my sound roll made, but I don't. It goes into the Fed interest rates. Why are we concerned and paying attention to the federal interest rates? The federal interest rates is the interest rates which we're going to pay on our housing, our cars. It can affect everything, right? It's a monetary policy that's controlled by the federal government. With that being said, let me pull it up here. With that being said, let me stop the screen share. I'm going to pull up on the Federal Reserve. Y'all give me 1 second here. Boom, here we go. So right here, the reason why I pay attention to unemployment so much, because look at it. On July 28th, about a week or so ago, This is from the Federal Reserve. These are the people that controls the interest rates. This is on the federalreserve.gov. It's a press release that released on July 28th. So this is, what's the name of this report? The Federal Reserve issues on FOMC statement. Now reach right down here. All right. So right here is what I'm paying attention to, because everybody wants to know will interest rates rise, lower, what interest rates are going to do. Right here, the committee seeks to achieve maximum employment and inflation at the rate of 2% over the long run. With inflation running persistently below the long run goal, the committee will aim to achieve inflation moderately above 2% for some time, so that inflation averages 2% over time and long-term inflation expectations remain well anchored at 2%. The committee expects to maintain a accommodated stance on monetary policies until the outcomes are achieved. So right here, the Federal Reserve is saying they want interest rates to be at inflation rates to be at 2%. We all know that inflation is around about 5%. Inflation has been going crazy over the last couple months, which was expected, because guess what happened last year? All those billions and trillions of dollars of stimulus packages, all that printing of money and sending it out to people, all those stimulus checks everybody got, that lowers the value of the dollar and that pushes up inflation. So inflation is going up. But guess what? The Federal Reserve still haven't raised interest rates. Why not? Look at that first line. They are trying to achieve maximum employment. So employment has now dropped to 5.4%. I think the Federal Reserve is going to wait to around about 3% before they start to raise interest rates. So as we see, the only reason why they're not raising interest rates right now, they're looking at inflation saying, oh, inflation is kind of raising there. Inflation is sitting around 5%. They wanted at 2%. So inflation is on the high end. But unemployment was at 6% last month. Now it's at 5.4%. As unemployment kind of continues to drop, this is when they're going to push up into interest rates are probably going to start to go up. Why does this mean so much? Also, a lot of people are getting unemployment. They're getting paid to stay home. Once that unemployment is pulled away, I think you're going to see inflation drop. I think you're going to see the unemployment numbers drop. As these unemployment benefits run out, people are going to rush out, I believe, and get a job or go back to work. And I think these unemployment numbers are going to drop. So you're seeing all these, you go to McDonald's, Starbucks, restaurants, hotels, everybody is having hiring problems because people are at home getting unemployment checks. Soon as those unemployment checks stop, you're going to see more people rushing back into the job force. Unemployment is going to come down. And that's when the Federal Reserve, I think, will start hitting interest rates. So at unemployment at 5.4%, I don't see interest rates moving for another year. All right. And this is what I'm basing it off of. You can take a look at this report yourself. Now, the next stop is, they already said it in the unemployment report. They said that the notable jobs gains occurred in leisure, hospitality, and local government. Now I'm bouncing back to our unemployment report. Let me pull it back up. Now give me 1 second. Pull it back up. Where is it at? It might be trying to hide from him. Federal Reserve. Oh, hit the wrong one. I put the Federal Reserve back up. I don't want to see the Federal Reserve. Federal Reserve, shout out to you. Thanks for that. But let's get back to where we was at. Stay on topic. Where we at? Unemployment. So right here, employment. So right here, they said the notable job gains occurred in leisure and hospitality. Leisure and hospitality are things like your hotels, your restaurants, I should have did one on Uber today, but I'll do Uber again later. But hotels, restaurants, food, things like that, travel. In order for hospitality, things that you meet people, stuff like that. They were the ones that would hit the hardest when the pandemic hit. Now they're coming back. Places like Six Flags, stuff like that. So me as an investor, I'm looking towards things like travel. I believe that you've seen airlines had a great year. They went to the bottom last year after Berkshire Hathaway announced they sold all their airline stocks, and you've seen airlines truck back notably in 2021. Now in 2021, you're going to see airlines. I believe that in order for people to be hiring more people for leisure and hospitality, I believe that's an indicator for travel. So, I'm holding on to my Southwest Airlines, looking at Carnival, But then again, we got the pandemic. It's kind of coming back and rearing its head. But looking at the jobs report, if they're hiring more people in a particular area, that believes that is set up for expansion. All right. So those are my things right there that I look at. Let me see what y'all say in the comments before I roll up out of here. Al, what's going on? It's my guy, Al. We got Canada in the house. Michael out of Canada. He says, Prince, I like that the live streams are coming back. Yeah, I got to bring them back. Sometimes, ladies and gentlemen, I'll really be out here. I'm just going to be 100% honest. A lot of things, a lot of projects that I work on. Y'all know I'm active duty military 18 years. Been on military active duty 18 years. That takes up a lot of my time. Then plus, there's a lot of projects that I'm working on at the same time. As y'all know, I'm an author. I work with schools. I work with schools, building my own firm, going to school and stuff like that, certifications and stuff like that, taking meetings takes up a lot of my time. So I really can't get live like in the height of the pandemic. So I do try to bring it to you guys and girls when I can. All right. But I'm glad to see y'all enjoy. Mike out there in Canada is in the house. All right. That's my guy right there, Max B. Max B. My guy Max B, he said, I missed the live, got to catch the playback. No problem, my guy. You can definitely check the playback and give y'all a quick replay. The highlight of the day was unemployment numbers came out. Unemployment dropped to 5.4%. We've seen unemployment drop by 0.4%. So unemployment dropped. And the number one noticeable reason why unemployment dropped was leisure and hospitality. That was the sector that got hit the hardest back in 2020, and they're having the biggest, strongest comeback so far. And leisure and hospitality, what it's doing is these are places like your hotels, your Six Flags, things that people go out in, restaurants. So I believe that as people go out, I believe travel will be the hotspot for growth, because in order for people to go to have leisure and hospitality, I think we'll see things like, I don't know about hotels because of Airbnb or whatever, but I see leisure and hospitality having a big comeback year. Now, why this is so important, why am I paying attention to this? Because of the Federal Reserve rate. The Federal Reserve rate is, we just went over the Federal Reserve's, we went over to the federalreserve.gov and saw their latest comments. They're the ones that control the monetary policy on interest rates. And they said that they wanted inflation to be at 2%. But inflation is at 5%. And then they also said they wanted unemployment. They wanted to reach maximum unemployment. Unemployment at 5.4%. That lets me know automatically they're probably not going to raise interest rates for another year. So that's what we kind of went over. This is an indicator of the first thing a company must do in order to expand is hire people. So I like to look at the sector that's hiring the most people. And that's why I like to place money or to look for companies, because when companies start to hire people, that means they're expecting growth in the near future. Think about it. If you had a company, the first thing you got to do when you start to expand, and if your money is good and you're starting to expand, you're going to hire people. The next thing is federal interest rates. Everybody wants to know, is interest rates going to go up? Or are they going to go down? These control what we get on houses, cars, everything. So right now, I pretty much bet my last dollar that federal interest rates won't be touched by this year. But also what's going to drop unemployment the most is when we get rid of all these unemployment benefits. Right now, people are not working. They're at home being picky, because guess what? I don't have to go work at McDonald's. I can make $1,000 a week via unemployment. Once these unemployment benefits run out, I believe we're going to see a big drop in unemployment numbers. All right. Let me see what y'all saying in here before I roll up out of here. Michael, what's going on? He said, I think many of us got a lot of value from your real estate video regarding the land you own. Could you teach about real estate? You know what? I need to get into that, Mike. You're right. Mike in here dropping gems. Okay, I'll do some more videos on land, vacant land. I always tell people the earth is for sale. I think land is, everybody's worried about the houses and inflation, and, as inflation go up, real estate has to reflect that, So there's land all over Colorado. There's land all over Arizona. Ladies and gentlemen, I drove from Denver to Kansas City. It was like a 7-8 hour drive straight east on one road, and it was nothing but land and cows. From Denver to Kansas City, there's absolutely nothing. So it's just a bunch of land out here in America. And I come from a small rural town, and I come to realize that, ladies and gentlemen, you have to understand that 20, 80, I would say it's not statistical. Don't quote me on this. I would say about 60 to 80% of America is rural land. Only 20% of America is really urbanized. Yes, you have your LAs and your New Yorks and major hubs, but look at California. California has a bunch of vacant land that you could be looking at. All right. I'll look into that. He said, I own my own president. I'm my own president. What's going on? I own my own president. He comments. He said, what do you think about Start Engine REIT, REIT, Real Estate Investment Trust? Are you talking about the company Start Engine? I have used Start Engine. And I made some money off of Start Engine. I just got through cashing out of a stock. So Start Engine, you have Start Engine, Republic, and what's the other one? Start Engine, Republic, and WeFunder. These are companies where you can invest in the company's pre-IPO. I invested into SolarTrack, and SolarTrack got brought out by Ideanomics, right? And yes, I definitely like Start Engine. I liked it. I went in there, I found the company, I invested into the company. 5 or 6 months later, a big company came and brought all of my shares for almost double for what I paid for them. Right. And I brought them for $1. They brought them for $1.68 a couple months later. And then, I'm in position to get stocks of the company that did buy my stock. So, Start Engine, shout out to Start Engine. That's a gem for everybody. President Obama changed that whole thing back in 2012 where everyday people can invest into new companies. Okay, I'm Dillian. I think that's how you said. He said, I just joined the live. Thanks for tuning in, brothers. Thanks for tuning in. All right, I'm my own precinct. Yeah, they offer REITs now, real estate investment trust. So real estate investment trust, I like real estate investment trust. I'm not big on the commercial. I don't really know what we're going to do with all this commercial land, all these skyscrapers. Nowadays, the first thing entrepreneurs used to do was go out and buy businesses and whatever. But now take me, hey, I want to build my own firm. The last thing I'm going to do is go get an office space. The first thing, so that used to be the first thing. Now that's the last thing, because due to technology and all the stuff like that, what we can do now with Zoom and, stuff like that, a lot of financial advisors are now working in their home office. So I'm definitely commercial real estate. I'm not crazy about the movie theaters. I know everybody got excited about AMC a couple weeks ago and with the short squeezes, but all these empty buildings, I'm not big into the commercial real estate, and REITs do that. It does make sense if they are leasing out or they're doing lease backs with like a Home Depot. Home Depot is very relevant. Lowe's is very relevant. Stuff like that. It all depends with that REIT. It all depends on how I have to do the research and see what exactly is in that portfolio. So you might go in there and be like, oh, let me get into this real estate investment trust, and it might have a bunch of movie theaters. On top of that, I'm not crazy. I'm going to have my guy come back on here. What's his name? Brad Thomas from Forbes Real Estate Investment Trust guy. He's actually, he just put out a new book too, The Intelligent REIT Investor, I think it's called. But the thing that he spoke about was the thing I don't like about REITs is REITs are too close to the stock market. Last year in 2020, if you remember, as the stock market was crashing, REITs were crashing. But at the same time, the stock market and REITs were crashing, real estate was going up. So the REITs were going down with the stock market, but real estate was not going down. So I kind of want to separate the two if it was me. So I would separate the two if it was me. So that's why I'm not crazy about REITs, because they correlate and relate to stocks too much. As we saw stocks going down in the pandemic, as we saw REITs going down in the pandemic, we saw housing prices going up. Why is that? How does that make sense? So I think stocks and REITs correlate to each other too much. And to be honest with you, I'm my own president. I had the CEO of Roofstock on here. I may have him come back on here. Look up Roofstock. I like their idea more, where they're allowing you to buy homes that already have tenants in them. So you're buying homes with the cash flow. You're buying houses like stocks. I'm more in tune to that versus the real estate investment trust, because the real estate investment trust was just way too close to stocks. I remember that. If y'all remember that too. He said, oh, I'm my own president. I invested in the solar track, but it's a long waiting list. You mean, is this the same one that I invested in? What you mean a long waiting list? You know, he said I invested into it. Okay, solar, SORT, so TRAC, I think it was. Yeah, empty buildings all across the city. Yes, I'm my own president, Roofstock. That's what, no, ROOFSTOCK. I can't. Gary Beasley, I think is their CEO. He's came on and he sells company where they sell houses like stocks. I kind of like their idea more than REITs, in my opinion. Michael says, what are you going to do? He said, what are you going to do with all that empty office space? Redesign buildings into something that can make money. Yeah. I mean, what is it right now that you can do? I mean, I can see distribution centers. Like if residential, that's the only thing I can see. If you own a hotel or if you own if I own the mall, maybe a distribution center or turn it into residential areas, some type of distribution, like, hey, maybe Amazon or a warehouse can use some of that space. But the traditional way of everybody going to shop inside of a store and the store not have their size and order it to their house, I don't think those days are here no more, you know? So yeah, if you owned a mall, what would you do with a mall? If you own a big shopping center, and the thing about shopping centers, companies, you will never see a Red Robin's, you will never see a Chili's or AMC movie theater by themselves. They're always near shopping centers. So you have so many businesses, they will get next to shopping centers so they can get foot traffic. All these companies, when they got shopping centers, you know, a lot of stores are relying upon the foot traffic of malls. And now that malls are dying off, you're seeing a lot of these shopping. You're seeing a place like a Chili's or a Red Robin's or whatever that was banking on that foot traffic go away. I can say the only foot traffic that is guaranteed is residential areas like houses, apartments. I would bet on that thing, but movie theaters, no, I wouldn't want to be in that business. You know, let me see here what we got here. Real Deal Finance. What's going on, my guy? Real Deal Financial, man. What's going on, Real Deal Financials? He says, salute to you, Prince. Definitely salute to you. Salute back to you. I'm definitely subscribed to your channel as well here on YouTube. I'm my own president. Yes, Roofstock. Real Deal Financial says REITs shorts are winning because of commercial assets and offices getting crushed. Yeah. Think about it. You know, I'm building my own firm. It's going to be in my basement. Right? Hush Drunk Master says, hey, oh, what's going on? Hey, Hush Drunk Master. But anyway, ladies and gentlemen, yeah, definitely when I look at REITs, real estate investment trusts, I mean, I like land. I think land is brilliant because it'll never go down. And real estate, gotta think about it. If I'm going to invest into real estate, I like to have hard assets. Like, you know, I own my own home. I own some land, right? It doesn't matter what happens in the economy. This house will always be a utility. My land will always be a utility. If the market crashed tomorrow morning, we went into the Great Depression, I still have a roof over my head. If we went into the Great Depression tomorrow, I can still get an RV and drive up on my land. I can grow food on my land. I can grow food on it. I can live on it. I can rent it out, all type of things. So real estate is the only asset class that is always it always have value. Stock market go down, I can't do nothing but wait till it come back up. If I owned the airlines last year, if I had a business goes down for airlines, all I can do is wait till it come back up. Right? So that's the difference that I look at with everything. So yeah. Let me see what y'all saying in the comments. So yeah, that's the way I look at it, ladies and gentlemen. When I look at real estate investment trusts compared to stocks, that's how I look at it. But anyway, ladies and gentlemen, that's going to conclude my time today. I just want to get over here and go through that unemployment report, talk about federal interest rates, and as an investor, reading unemployment reports to find new investment opportunities to see, it gives you a great idea of who is hiring and where they're hiring. But anyway, ladies and gentlemen, y'all already know what my name is, Prince Dykes, and y'all know what show this is, the Investor Show. Until the next video, podcast, cartoon, books, or whatever else crazy you see me do around the globe, make sure you grab your coffee mug. It's the only way to read your financial reports like a genius. But until the next video, podcast, cartoon, whatever else you see me doing around the globe, my name is Prince Dykes. Peace, be safe. I'm out. Thank you.